my shares in FTX US, well, we're going to have to write those down. It's not my first bad investment.
You mentioned you spoke to Sam Bankman-Fried last Thursday. What was that conversation like? Did you feel duped, lied to, or betrayed?
Kevin O'Leary was a large investor in FTX and lost millions as a result of the recent bankruptcy. In this highlight, O'Leary reveals his recent conversation with Sam Bankman-Fried and whether he feels betrayed by FTX or not. Make sure you stay until the end because O'Leary confesses how shockingly low his millions of dollars of shares of FTX are now worth.
I think what we need now is to flush out the auxiliary collapses that are going to occur because of accounts that, let's say, public mining companies had with FTX or other hedge funds that have obviously over the weekend gone to zero in their accounts. Now, first, I have some disclosures here. Okay, number one, I'm a paid spokesperson of FTX, so I've been dealing with their management. I've spoken to Sam last week on Thursday. I also have corporate accounts in FTX. I'm also a shareholder of FTX International and FTX US. So now that we got that out of the way, I just want to make sure I'm being very transparent on this. But we're not finished with the collateral damage. And so to your question, this is a bottoming process. An event like this is very important because it's finally going to have several impacts in areas that we need. It's going to accelerate regulation, number one. As we speak, I'm at the governor's conference in Orlando. This is topic number one in financial services. The amount of discussion going on last night and certainly today about this situation is going to move. It's definitely going to move legislation in the House. There's no question about that. This is a defining moment. But what we don't know is how many other dominoes are going to fall yet. We need that to finish out.
You mentioned you spoke to Sam Bankman-Fried last Thursday. What was that conversation like? What was the mood, and did you learn anything?
Yeah, let me explain the context of that conversation. On Wednesday of last week, the whole world knew that there was a liquidity issue at FTX and that the hold on the balance sheet was somewhere between $6 and $8 billion. Now, I work in the indexing market for sovereign wealth and pension, and so we were getting a lot of inbound requests about information about the situation because that's the kind of money that an institution or a sovereign wealth fund can put to work if they thought there was an interesting opportunity. And in financial services, illiquidity events or liquidity events like this can be interesting investment opportunities if you think it's a legitimate investment and it's not going to issues with the regulator. So the timeline of that conversation is I put a message into FTX. I wanted to confirm the amount being requested. Was it going to be 6 or 8? Sam called me back, very, standard conversation. He was, rational, and we had that conversation about confirming what the amount was going to be. The amount was $8 billion. That's what they were looking for. So I went back to these various entities that were asking me about it. And by that time, the SEC chair was on the air around the world. I think the network was CNBC. And he made it clear that they were going to come down hard on this situation. So the minute that occurred, that was the end of any sovereign wealth fund's interest because they index in the S&P 500. They have to be compliant with the SEC. And so, if you're a sovereign wealth fund making $250 million a day, the only market you can put it into to park it is the S&P. It's liquid enough to absorb that. So they don't make moves against U.S. regulators. And that was, I think, the last. I know that was the last time I talked to Sam, and then the other events unfolded as you saw. There was no way to get that $8 billion onto the balance sheet of FTX with the regulator hovering overhead.
So, Kevin, you mentioned you were a brand ambassador for FTX. You promoted FTX. I imagine, you were really into compliance and you felt that FTX was up to regulatory standards. But in the end, do you feel duped, lied to, or betrayed?
I'm a big boy. I've seen this movie before. I will say on a personal level, and I don't think if you talk to 10 people that knew Sam, Nine of them are going to say what a wonderful guy he was, and I'm one of those. I just think he's a very interesting individual. Over time, we'll peel this onion, find out what happened. I don't think that guy has an evil bone in his body. The truth is the FTX platform was very robust. It was very well designed. Hundreds of millions of dollars went into making that. And that's why there was sovereign interest and pension interest in the platform itself, because at that time, just before the gates came down, you got to remember, all of these funds got gated, towards the end of the week. And there they are sitting there. If somebody had provided the liquidity, and here's the interesting debate that was going on. Let me share this with you. So let's say your sovereign wealth fund, $8 billion is a rounding error for you. Do you really need $8 billion? And let's say what was on the table in the deal was ownership of FTX, which was on the table. So for whatever the amount is to keep FTX liquid and compliant, you could own it. Now, if you think about Binance and FTX, that's about 82% of the world's exchange. I mean, that's it. And that's a big, big chunk. So there was interest. And here's the real debate that went on. It really wasn't $8 billion required, because if you could put in, let's say, $2 or $3 billion, then open the gates and let anybody that wanted to get out, get out. The minute you open a gate, some large percentage doesn't use the gate because they feel they're safe and now can transact again, and they've got backing. That was the debate going on in the later hours of Thursday of last week. My guesstimate, and it's only a guesstimate, is the number that could have cleared FTX and kept it solvent would be about $3.5–4 billion, which is not a heavy price to pay for what had been built up over those years. However, once you go into a situation where regulators are coming in and the whole thing goes south, there's nothing you can do about that. But for about 12 hours, that was an interesting conversation going on all around the world.
So, Kevin, as you know, they filed for bankruptcy. So, first of all, are you still a paid spokesperson after the bankruptcy? I mean, have you talked to the new management? Or now are you a creditor for FTX? And, your shares obviously are in jeopardy, your ownership shares because of the bankruptcy. So, I mean, do you still have that relationship? Have you talked to the new CEO of FTX yet about your relationship?
No, I haven't, but I know the existing management. There's no point in having those conversations right now. I mean, the only conversation I've had is with my lawyers and my auditors, as every institution's had those conversations over the weekend. We are going to go through a bankruptcy process. There is precedent for this. You can go back and look at Mount Ott. It took 4.5 years, and because that was also multinational. So we've got the shares, my shares in FTX International, my shares in FTX US. Well, we're going to have to write those down to zero, most likely. And that happens, This is not my first. It's not my first bad investment. It won't be my last, but luckily I make more good ones than bad ones. And so that's the way I look at it.
About that, because you mentioned that he's the son of compliance lawyers. Look, and my father was a great electrical engineer, and his father too. I'm not allowed near a plug. There was a thing about their governance at FTX that was very peculiar. There was no CFO. There was no board of directors. It seemed that management was kind of murky, and yet they were able to raise hundreds of millions of dollars. Do you think that the failure in due diligence and the failure to ask the questions and the failure of people to say, hey, you know what, this doesn't look the way we normally invest in companies. Why did so many people give Sam Bankman-Fried a pass when it came to governance, when it came to corporate governance and the structure and management? Is it just because of his parents being compliance lawyers? I mean, it's not genetic. He didn't go to law school as far as I could tell.
They didn't raise hundreds of millions. They raised billions. The cap table has pretty well every significant financial services behemoth company on it. It was considered for a while to be the premier, compliant platform in the sense that we had an American running it, an American creating it. That gave some people some confidence, maybe ill-advised. However, Sam Bankman-Fried is an American, and he's well known, and he is, no question, brilliant. I mean, when it comes to understanding blockchain and cryptocurrencies, very few people had his knowledge and his ability to build code around it. Remember, Serum is one of his projects as well. So he's well known in the community and a founder, and for a while, saving lots of other entities by putting cash into them. Where that cash came from is under question now, obviously. But the bigger question about this from the institutional perspective, and we're having this dialogue even today, is this does not kill crypto. This is one event that helps stabilize crypto. There's going to be a silver lining to this disaster. There's no question about it. It'll be called regulation. And I'll tell you why. It's not new regulation required here. You can look at any broker-dealer exchange tied in the U.S. to stocks or bonds or futures or commodities and have regulations that are protecting investors in the U.S. market. So it's not a big stretch to have the regulators finally say we're going to apply that to crypto exchanges the same way.
Click here to watch Mr. Wonderful, Kevin O'Leary, revealing what he is doing with his losing crypto bags and stock holdings this year to get some of his losses back from the taxman.